Right now, three huge ASX opportunities are unfolding which could make them the best place for March. War has broken out and oil has taken off, but the big question is this just the beginning, and how do you make the most of it? We break it all down and give you our signature stock market playbook so you can navigate these stocks like a pro. Backed by Australia's leading government accredited share trading education and supported by major media outlets Australia-wide, I am Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil. What an important week this is going to be.
Yes, we were going to do something else, but how can we not speak of what is happening right now with oil and war and stock market? So let's get straight into it. Now, big news coming out of the oil space right now. Pedro, did you want to dive in quickly a little bit into that, and we'll go and have a look at the oil chart to see what is happening, but obviously it's all about the Iran situation, isn't it?
It definitely is, and we're back on risk on territory. I mean, oil prices are run by supply and demand, which everybody knows, but it's also run on geopolitical risk. And you only have to go back to after 2001 and that huge run that oil had after the war on terror, what happened after 9/11, to see what can happen with the price of oil when there's a extended conflict. And that's really what the key thing is going to be here, whether this Iran conflict is going to extend for a long period of time or whether it's going to be a quick operation. But right now, the price of oil is skyrocketing.
Yeah, let's go and take a look at the chart of oil to see that a bit further. And I mean, we've been making videos about oil for months now, Pedro. I mean, looking around these levels at $50, $59, where things were likely to potentially find a bit of a base. I've got this natural level of support through here where you can clearly see that now the market has come back, tested it back all through that December 25 period, and we're coming into an interesting level in terms of where it's make or break for oil. I mean, right now we're trading at around $69. This data is a little bit behind, but around $69. So we're taking out this last barrier of defense, I guess, for the, sellers from the downtrend point of view. So, we could very easily, like you mentioned, get a nice little spike up for the oil price around that $86 and maybe get down into that 98 region where there was a lot of price agreements back again during those 2011 periods. But you can see that really is where this market could get to. We had a few times where it popped its head above the $1.09 level. Really, $1.09 is the cap for oil. So much room to move if we do get vertical here on that tension and spike potentially another 50%. Are you seeing something similar here with this chart, or?
Yeah, absolutely. We're at the bottom of that range, and really this is the average of what oil prices were in President Trump's last presidency, and now we've seen a bounce from that. So just much like you've put on your chart there, if we go to the weekly chart, I just wanted to highlight that we did bounce to that $76 today. This is a bit of a lagging chart here, but you can see how far that is, and it is a critical level of resistance. That's about that midpoint of that range that you've marked out, which 84, 85 seems to be that upper limit. So I wouldn't be surprised to see oil trade above up to that $85 if we see a prolonged conflict, but it could very well bounce and maybe trade sideways. You can see that it has been falling ever since 2022. It's been on a long-term downtrend, and it's one of the commodities really that have performed the worst due to oversupply issues. But with this renewed conflict, definitely we could be seeing much higher prices, which obviously will reflect on petrol prices, unfortunately, as well.
Yeah, I mean, you've been speaking about it quite a bit. Obviously, that Strait of Hormuz, which is one of the major choke points when it comes to oil globally, in terms of the conflict, if it does become prolonged, what are your thoughts on that? I mean, really, because it controls, or I guess it flows a lot of the global supply through that region, because you couldn't have picked a worse spot to get, a supply issue when it comes to oil moving forward, right?
Definitely. It is a very important choke point, and we're already seeing commercial ships divert around it down the port of Good Hope down in South Africa. So you can imagine that's a much longer route to go with, because they're basically worried that a missile is going to hit one of their ships. So that increases insurance costs, it increases lead times, it increases petrol, obviously, for the ships to go around that way. So that's added that risk. And now the real risk is if this is a prolonged conflict and then America or Israel decides to, say, bomb the Cargo Island, which is where Iran's major exports are, in that region, then that's going to take a lot of supply offline. And I think that's what the market is really worried about.
Yeah, all right. Well, let's get into our first lot of stocks, which is Horizon Oil. Now, they came out with some massive news today, which is that Horizon has launched a takeover bid for Q, offering cash plus shares in a deal that values Q at a 10% premium. Now, Horizon already owns nearly 20% and says combining the two could unlock around $2 million a year in synergies and create a larger, more diversified oil and gas group. With oil prices trending higher, scale matters. Stronger pricing boosts cash flow and makes consolidation more attractive. So this report strategically could support Horizon's share price if the deal completes smoothly. That's the big if. But let's get to the chart and have a look at Horizon now, Pedro, because this one obviously is in a beautiful uptrend. I know often everyone speaks about Woodside and some of the other bigger players, and we've got actually the third stock we've got coming up is an absolute ripper. And it's at levels, it hasn't seen in years, making it one of the best opportunities. But anyway, looking at this one here, really nice trend, really uniform movement right now, the way it's unfolding. And it's just broken out. This week it's popped out, broken out of this little short-term area of resistance that was holding the stock up at around 20 odd cents. So we're through now, and I think it's important to identify where to next for a stock like this, because it is a little more illiquid. And so when it gets going, it can get going very, very quickly. And when I look at this chart, I think it's really past a major hurdle. That there has been such an important hurdle throughout history. And moving forward, I think, if we can continue to hold above that level cleanly, well, Horizon has a real chance of going up to that 44 cents. So almost doubling in price, which makes this very attractive and one to definitely watch. But in terms of the way it's doing it, it's very, I guess, succinct and much more, not stable. Stable is one word, but gives it the stock much more chance to continue to get to these higher levels and do it in a safe manner where you're able to get in and out. It's always important to monitor that stuff. Are you at a euphoric, speculative type environment? Or is this really a true trend forming? And, just one look at the way this stock has risen throughout history, and it tells you today we're in a different story. Back in 86, look how sharp the run-up was. Back in 96, look how sharp. Again, in 2006, these sharp spikes are often those euphoric sentiment-driven, by the rumor type situation. And when everyone's piling into a stock moving that quick, that's often a sign of the end. But we're not showing any signs of that right now. In fact, it's very smooth, very clean. That's why I think this one presents a bit of an opportunity. But again, what I will say is it is quite illiquid. And so being that way, you need to be on top of addressing the liquidity of the stock, whether you can get in and out at the price you want at the time you want, and all of those things. Pedro, did you want to have a good look at this one and see what I may have missed?
I think you've covered a fair bit there, Phil, but I would just add that what I like about Horizon is that they've actually got a project in China, and China is going to be one of the main people or countries that are going to be affected from the Iran conflict. They've been buying a lot of Iran's oil at very cheap prices, getting past sanctions and things like that. So if Iran's oil, comes offline, they're going to be quite affected. They're going to be looking for other avenues. So Horizon Oil could be set to benefit from that. Now, technically, it looks great. I agree that that trend that is unfolding there on the weekly chart looks very nice. I would say that it's heading to a period where it has found a lot of volatility in the past. And I've just outlined that with that yellow box here. So between that 28 cents and 45 cents. So expect a lot of volatility when it comes into that region there, and we could actually see, like you said, double in price all the way up to that upper band of 45 cents to 50 cents. I think it's looking quite interesting, and if you're looking for that those more volatile growth type stocks, this could be the one.
Yeah, fantastic. Now, if you want to know more about building your portfolio, getting those stocks that fit the right criteria, check this book out. It's How to Beat the Managed Funds by Dale Gillham. It's free. Just have to pay the shipping. The link is in the comment section below. But as always, if you want to take your trading to the next level, go and check our website out, wealthwithin.com.au. Have a look at our trading courses, especially the government accredited share trading diploma, and also have a look at some of those testimonials to see what is possible, because our clients are absolutely nailing it at the moment. But let's move on to our next stock, which is Viva Energy. Now, Pedro, this one here, it sits in an interesting space. I know you and I off air were talking about really who's going to benefit from this oil spike in terms of the price. And we got this one on the radar. It's a refiner. It basically provides the fuel to the world. So I shouldn't say the world, to Australia, and potentially to the world. But it's one that sits in not the exploration side of things, but nevertheless, it's coming into an opportunity that looks very, very interesting right now. Your thoughts, I guess, from a fundamental lens on this one before we get into the chart?
Yeah, and I think it's an interesting point. When you and I look at charts, we look at them technically and we say, oh, that looks good. And that's one way that you could start to filter charts. We teach that in the course. You can filter stocks fundamentally or technically. And when a stock looks like this, technically, it definitely pricks our ears up, and we see opportunity. And then, of course, you start to delve into the company. And what we found is that, yes, they are a major refiner and could benefit from a spike in oil. I mean, they'll pass it on to consumers, obviously. So let's get into the technical side, because I think that's telling really the better story here. And we can go to the weekly chart here, because this is really outlining the opportunity. We can see that it trends quite nicely. So this is another thing. When you're picking stocks to trade, see if they match your personality and the way that you want to trade. This is one that it could actually suit a trader or just an investor. You could have bought back in 2020 and had a nice little exit up 2024, 4 years with a price appreciation. Just say you got in around that $1.50, and you're not going to always get it out at the top. Let's just take a little bit off. 125% in 4 years. That'll be pretty nice. But at the same time, you can see that it does trend in these manners that you can actually get in and out and have nice opportunities to be getting some income along the way. And this is really what we teach when we're teaching students technical and price analysis and pattern analysis, really, how you can trade in these markets. And, as important is how you stay out of these moves as it's trending down, because you don't want to be trying to get into this stock as it's trending down. You could be thinking that that's a dip here back in July 2024, and it was just a move in that direction. But at the moment, really the two levels that we are seeing here, it looks like it has halted. $1.70 seems to be that lower band, and around that $2.20 is that upper band. So you notice that it has changed personality. Now it looks like it could be bouncing to that $2.20. And I think that's a very likely possibility that it does trade to that. And that's a nice 20% upside. For the risk, if you were just saying, you could set a base or a stop loss around that, below that $1.70, that's around 9% downside. So that's a good risk to reward ratio. And this is what we always talk about. But of course, that's only one aspect. Obviously, there's more technical aspects that you should consider before you take this trade. But technically, I really do quite like it. And fundamentally, it sits at a very nice PE level, and it's got dividends along the way as well for all those dividend liking individuals.
Yeah, interesting for an oil stock as well. Let me get to the chart and have a good look, because there was one thing I really caught my attention with this one. Because right now, for me, the big question for Viva is, you're looking at a reversal play, right? If you're looking to trade this long, it's looking at, has the stock truly reversed, big picture? And, what makes this really interesting, and actually I wanted to bring up the weekly chart, but what makes this really interesting in terms of answering that question, you touched on it a little bit earlier in terms of the character changing. And again, as Pedro mentioned, these are things we teach, because oftentimes the closer you can get into the bottom and the closer you can get out to the top offers you that the best risk reward, right? But how are you at confirming these types of moments? That's the trick, and they're the things we teach. But quite simply with this one, why it's getting to an interesting point now is if you look back at that April 20 period, it's really quite cyclical, and you see that fall out of April 2020. Then we get one uptick in the market. We find a higher base in September 2020, and then we have another run and find a third base in February 2021, and it's all holding above that initial, drop that near that all-time low. And you fast forward to today, we've had this big sell-off down through to a new low, a significant low, and the market's, what's it telling us? It's had 2 attempts to go lower, and sellers aren't having it or buyers aren't having it. So we're starting to find multiple occasions of significant buyer support at higher bases. These are the things that are starting to point in the direction of Viva potentially being at a significant reversal point and changing that momentum. But that's why I find it quite interesting, even for the more medium to long-term play potentially. But I'm with you, it's always important to plan for the worst. And let's get to $2.20 before we start getting excited about $3 or $4. But it's just, a little important note I wanted to throw in there because, identifying those moments. I mean, how many times have you seen it with students that come to us? It's like, now I can see what you mean. I can plan for multiple timeframes of trades. It's not just me trying to eke out the smallest amount. I'm more confident to now hold the stock a bit longer because I'm, more comfortable in identifying the market's actually telling me that it doesn't want to go any lower.
Yeah, absolutely. Yeah, it's all about that confirmation and, just taking the trade and having your money management in place if it goes the other way.
Yeah, fantastic. All right, now time for our third stock, Omega Oil and Gas. Now, Pedro, mate, I know this is one you chose, so please go for it.
Oh, yeah, this is an exciting one. And, I'm sure a lot of people would be thinking, wish that I got onto this a little bit earlier. This is a Omega Oil and Gas, and it's an Australian oil company, which is, it's great to see that they've got a project up north in the Turuma Trough in Queensland. It's got all the infrastructure already in place, and it's one of the biggest oil reserves in the country. So it's quite promising at the moment, and it could be a nice exporter to the Asia region. So, a little bit of the risk off type of scenario as opposed to, the Middle East. So let's get onto the chart and have a look at what it's doing technically. And you can see that it's just been making strides. It's a fairly new company in the market. 2022 came out. And what I like is that it actually didn't bomb like most of them do. It traded sideways for a long period of time, but it never really, had a major downtrend. It bounced along that 13-cent level, for 2 years, basically in 2024 until it found that base. And then it had those higher bases and higher highs for a long period of time. There was that downtrend here in March 2025, and I think that was like an overall market type thing. But now it's gone back into trend, and that's what I really like. So it does seem like it's the same kind of momentum, a little bit more vertical than the previous momentum. It has gone away from that. There is the risk, of course, that it could come back to that momentum before it has that next move up, which could be a high possibility. So that's something that obviously you have to ascertain in that that risk scenario. But it is, at 57 cents for an oil company, that's it's looking pretty good. And the fact that volume as well has been increasing. Let me just bring that up on these up moves. Look at that spike in volume there. Really all throughout this period, there's been a lot of buying going on, and that gives you a bit of an indication about the big end of town, about what's going on. So that's about 11 million shares traded. It's not that much. You could probably, move it with a small fund. Basically, you don't need a huge fund to be putting a lot of money into this. But I do like the fact that it's getting interest. It's definitely getting interest.
All right, now if you want more hot stock tips, check out our video, Trump's 15% tariff shockwave, 3 ASX stocks to buy.